Well, you're watching our coverage of the midterm budget. The Finance Minister Tito Mboweni wrapping that up a few moments ago. I'm still joined by Chief Economist at IQ Business, Sifiso Skenjana. Sifiso, there's something very interesting that the Finance Minister mentioned today, and he, opposed the call by some people in the fraternity saying, let's spend our way out of trouble. The more we spend, perhaps we could get this economy going. And he raised a very, very interesting analogy. He said that in 2009, when we spent R1, we've got R1.60 back. That's not the case now. We're getting less than R1 back for every rand we spend. Where do you stand on that principle of whether or not we curb our spending or we spend our way out of the trouble?
Well, that's the antithesis to that question is, can you fiscally, consolidate to get into growth? And so can you go on to fiscal austerity to get into growth? And we know that there's numerous data points that show that over the medium and the long term, when you follow the cycle, which is what we call pro-cyclical, is that you cut spending while the economy is in decline, that results in negative economic outcomes in the medium and to the long term. And so it certainly is not the way to go about it. But I think the question the minister should be asking is, where can we realize the highest multipliers at a sector levels? This is what we often talk about when we talk about the revealed comparative advantage. It's the sectors that are enabled, that enable you to operate at the largest competitive level on a global context, and that's where you can get the highest multipliers. We also have, of course, to take note of the fact that a lot of the sectors that have lost competitiveness in South Africa are also the labor-intensive sectors, and therefore we've got to understand those are also the key drivers as to why we're seeing that multiplier from government spending going into GDP declining over time.
So you've got to consider that when tackling where you put your money. Let me ask you this as a final one before I let you go. We heard Cascavadia there, the CEO of Business Unity South Africa. Before this budget, they were hoping that they hear in the speech something that speaks to a better business and investment environment. He speaks of structural reform, and I think he would very strongly suggest that none of those structural reforms were mentioned in the budget that was sort of definitive, if you like. Over this long-term trajectory, we've been on this for a long, long time. Do you see this spanning out over the next 5 years? And I speak of labour regulations, I speak of spectrum, and I speak of security of assets.
So, we can start with the security of electricity in the context of the African economy, for example. If you just look and say, one, they're proposing 11,000 megawatts of alternative energy. That cycle alone is 3 years because of project preparation, bankability, and then you go into the infrastructure build process. And so it's going to be 3 years before we even see any of that coming onto capacity. There's also challenges with what we call base load in terms of electricity. It's electricity that can be available on a 24-hour basis. Alternatives doesn't give you a base load and therefore won't give you necessarily security of energy. And when you also then contextualize some of the other reforms, for example, from a public sector wage bill point of view, we heard the minister talk about proposals that are being tabled, and of course they're waiting for the court outcomes. But we know that that's one of the biggest elephants in the room, and I think they're going to continue struggling with reining that in. And then, of course, the other that continues not to come through is municipalities, particularly when we talk about households now looking at opportunities of self-generations, mining companies looking at self-generation. A lot of municipalities make their money from electricity sales. And so when you divert those funds, those municipalities who are already financially constrained are also looking not viable right now, are going to go under increasing amount of pressure. And that will impact service delivery and also other sectors where municipalities play as a network industry.
As I let you go, Sifiso Skenjana, Shahan, just a quick look at those metrics, if you like, announced today as a reminder. Growth now this year on the South African economy will shrink by 7.8% as projected in this latest budget. The budget deficit, Shahan, which is the difference between the amount of money we collect and we spend, is a widening gap at 15.7%, and that debt to GDP ratio, 81.8%. The finance minister telling us today, Shahan, that will only stabilize in 2025 at 95% of GDP. Now, what does this mean? Well, we've got a 5 trillion rand economy. He says that our debt would be 5.5 trillion rand in 2025. I need not teach you the basic math.
Yeah, exactly. Yeah, it's a worrying situation, isn't it? We're going to leave it right there, but we will continue our reaction to the story. Devan Murugan.